Oil prices have now crossed the $100 per barrel mark, and this is one of the most important signals for the global economy right now. It's not just a number on a chart. It represents pressure building across global markets, supply chains, and everyday life. To understand this properly, we need to first understand why oil is so important. Oil is not just fuel for cars. It powers transportation, shipping, aviation, manufacturing, agriculture, and even electricity production in many parts of the world. So when oil prices rise, it doesn't stay limited to energy markets, it spreads everywhere in the economy. Now, the current rise in oil prices is mainly driven by global uncertainty and tensions in key oil-producing regions. Whenever there is instability in these areas, the supply of oil becomes uncertain. Even the fear of disruption is enough to push prices higher in the market. Traders react quickly because oil is one of the most sensitive global commodities. Another factor is demand. As global economies continue to recover and grow, energy demand increases again. When demand rises and supply is uncertain at the same time, prices naturally move upward. This combination is what is currently pushing oil above the $100 level. Now let's talk about what this actually means for normal people. When oil prices go up, transportation becomes expensive. That includes shipping goods from one country to another, delivering products to stores, and even daily commuting. As transportation costs rise, businesses also start increasing prices to cover their expenses. This is where inflation begins to rise. Inflation is basically when the cost of living increases over time. So food, clothing, travel, and services all become more expensive. This is why central banks around the world pay so much attention to oil prices, because oil has a direct impact on inflation. If inflation rises too fast, central banks may be forced to keep interest rates higher for longer. Higher interest rates make borrowing more expensive. This affects businesses, housing markets, and even consumer spending. People start saving more and spending less, which slows down economic growth. At the same time, financial markets are reacting in different ways. Some investors are worried that higher oil prices could slow down global growth. Others believe that strong demand and technological progress can balance the impact. This is why we are seeing mixed movements in stock markets right now. For developing countries, the impact can be even more serious. Many of these economies depend heavily on imported oil. When oil prices rise, they have to spend more foreign currency to buy the same amount of energy. This can weaken their currencies and create pressure on their economies. If we look at history, sharp increases in oil prices have often been linked with economic slowdowns or even recessions. It doesn't always lead to a crisis, but it increases risk and uncertainty in the global financial system. Now, the big question is whether this price increase is temporary or long-term. If it is driven by short-term geopolitical tension, prices may stabilize later. But if supply issues continue or demand keeps rising faster than expected, then high oil prices could stay for a longer period. Another important angle is energy transition. The world is slowly moving towards renewable energy like solar and wind. But this transition takes time. Until then, oil will remain a key part of the global economy, which means its price will continue to have a strong impact on global stability. So when we look at the bigger picture, oil crossing $100 is not just a market update. It is a warning signal that the global economy is entering a more sensitive and uncertain phase. Inflation risks are rising, central banks are under pressure, and financial markets are trying to balance between growth and risk. In the coming months, everything will depend on how supply situations evolve, how demand behaves, and how governments and central banks respond to these challenges. Because in the end, oil is not just a commodity, it is one of the strongest forces shaping the global economy.